I'm just going to see. So I'm not going to square sheet.
Okay, I'm also going to change to my hotspot because my internet is unstable right now. Hold on just a second.
Yeah, sure. Take your time. Take your time.
And my dog just started playing with the toy.
Yay! He must have a lovely toy. So just for everyone watching this, we're going to do case study 8, and we're going to start from scratch. Should zero all this out. I'm going to zero this out so that we have start from 0. Do zeros everywhere. 0, 0, 0, 0. Everything is 0. I'm going to file, save that as a template. Template. Okay. On my desktop, so I find it later again. All right, so let me know when you're ready. Are you ready?
I'm ready.
Perfect. So what I don't have in front of me right now is the actual case study. So you're gonna, if you can give me the, when you see numbers in the case study, if you give those to me, that would be helpful because I don't have them. Because I only have this one screen right now on my laptop, right? Sorry for the loud birds. I'm sorry, what?
Okay, can you hear me? Can you hear me?
Yeah, I can hear you, okay. Yes.
Let me read it to you. So module 8, case study 8, kill me now, the mission never ends. Okay,
tell me what the budget is.
25 million.
All right, let's start there. Let's start with $25 million. I'm just going to put in the budget right now. Okay. $25 million. Here we go. Now, the US, when we do the estimates, we're leaving that open right now because we're going to calculate the US later. So forget the right side here right now. Just look at the left side. So all we have right now is 70% of the budget, which is 17,500,000, which is automatically populated here now, as our international sales estimates. So we're showing international sales estimate of 17,500,000. That's where we are right now. So that's where we're starting. We're clear so far. Yes, you can stop me when I go too fast. Okay, here's where we are. You can see my cursor moving.
I can see.
Yeah.
How did you get to the gross revenue improvement? How did you get that 17
million?
So
let's start from scratch. Here's how you get that. The case study says 70% of your budget is going to be your international sales estimates. So all I'm doing is I'm taking 70% of $25 million. Yeah. I click enter, and that's how I get to the 17.5.
Okay.
Right
now.
I'm going to zero this out too because I don't want, this is all populating. So the next thing we do is we know what our international sales estimates are because the assumption says 70% of your $25 million is going to be your international sales estimates, which are just estimates. We haven't done any sales yet. It's basically the sales agent telling us, here's what I think I can do with this movie. Maybe. That's all this is, right? The next step, however, our sales agent did actually do some pre-sales. And the pre-sales per the assumptions are 30% of the budget. So what we're doing again here, we're going is 30% times the budget. That's all I'm doing, clicking enter. There we go. And I'm going to zero this out again because I don't want to, So then what it says is,
question?
Please.
There's nothing for US because you didn't give us a US figure, right?
No, we're going to figure the US out together in a minute. So ignore the right side of the screen for now. Because that's where we're going to go in a minute to talk about our US. Right now, we're just doing international. We've just made some pre-sales. We made 30% of $25 million in pre-sales, which is 7,500,000. So now we have to figure out what is our down payment from these pre-sales, because when we make pre-sales, the distributors give us an upfront payment on signing, when they sign the contract. So we're like, okay, how much is that going to be? And it's going to be 20% of whatever was signed, and was signed is $7.5 million, right? So we're going to figure out how much is our down payment by going 20% times 7,500,000, right? There we are.
7.5 million.
Correct, exactly. Now the sales agent says, I don't work for free. I want to get paid on the money that you're making. So he's going to charge us our sales fee on this amount that we received, which is really just the $1.5 million, right? Now I'm calculating. Oh my God, that dog is so adorable. Oh my God. I want one like that. So what we're doing now is we're calculating how much money do we have to give the sales agent from our down payment. In the assumption, it says 12.5% of our down payment is going to have to be paid to the sales agent from our down payment. So all we're doing is we're going to do 12.5% times our down payment, which is this. So what we end up here is, what do we actually have in our hands right now? How much money do we have from this down payment? And that is the down payment minus what we paid the sales agent. That's how we get to the 1,312,000. Okay, I'm going to zero this out too because we're going to go step by step.
I'll be right back. The other dog is barking at me.
That's okay. Take your time.
I'm back. Okay.
Great. So now we have figured out, okay, our first financing component is our down payment. So we got $1,312,500 as our down payment. This is our first finance element. This is what we have right now. So now we're figuring out the bank loan. In the assumptions, it says that the bank will give us a cash flow loan for our pre-sales of 90%. So here, you tell me what the number is that I'm getting from the bank, 90% of my pre-sales. How much is that?
Is that 90% of the budget?
90% of your pre-sales is what you get from the bank.
Oh, 90% of 7.5?
Correct. And how much is that?
I need to open up my Excel. Hold on just a second.
Yeah, sure. Take your time.
Okay. So I have 22.5 million.
Let me see if that's correct. No, that's not correct. You have to think about your pre-sale contracts as being 30%, which is $7.5 million. And what the bank will give you is a 90% discounted rate of that. So your answer should be 6,750,000. Well, how did you get to the 2 million? Let me check your, I'm going to check your formula now, and I'm going to see how you got there.
So it's not, so it's 90% of,
yeah.
Sorry, now the dog's making noise.
That's okay, no worries. I'm not seeing it on your, maybe I downloaded the wrong one.
90% of 25 million?
Oh, darling, let's start from the beginning. I'm going to zero this out again, zero. Let's understand the process. The first we do is we're estimating how much money are we making with this movie. And that's our sales estimates of 70% of 25. So this is how we get to the estimates, right? When we start the process at actually selling distribution rights, we're actually entering into distribution agreements as we would when we sell the movie. The only difference is we're selling this before the movie is finished. So that's why they're called pre-sales. Otherwise, you would just be selling distribution rights and you just go out and sell your rights because that's how you make money with your movie, right? And in our assumption, that number that we're pre-selling is 30%. So 30% of our budget is now being pre-sold as actual distribution rights. So that's this number, 7,500,000. We're starting with the entire estimate, which is our bucket of rights. And the bucket is then reduced by the sales that we're actually making. So we have less sales available. We took some sales out and we're now selling them. That's how you get to that number. Now, when you go to the bank with the sales agreements that you have in your hand that you made, which is the 30%, the bank says to you, thank you for these agreements, but I'm not going to give you 100% of them because maybe one of these distributors is not paying. I want to have my risk a little reduced. So I'm only giving you 90% of your pre-sale contracts. The pre-sale contract amount is the 7,500,000. If the bank only gives us 90% of that, sorry.
Okay, gotcha.
Come on. If the bank only gives, hold on, my screen is being silly. This is why I hate having just one screen. Hold on. Okay, so if the bank only gives us 90%, can you see me? Can you see the screen again?
I can see again, yeah.
Okay, so when the bank only gives us 90% of our pre-sales, it's 90% of $7.5 million, right?
Gotcha, okay.
Okay, so how much is that? Tell me what 90% of $7.5 million is.
Equals.
Having fun there. Yeah, we're partying.
I'm not gonna be able to get it that quickly because I'm a few steps behind you on the Excel. I probably have to do it on my phone.
Yeah, just do it on your phone, no worries. Because we're just doing it step by step here. As long as you understand what we're doing and why we're doing it, just do it on your phone. So you understand we're doing the bank loan now for the contracts, right?
So, okay, 90% of $7.5 million.
Correct.
$675,000.
That's correct. So remember the down payment we already received? Of these contracts, we got a prepayment, which is the down payment. So now that the bank is giving us a cash flowing of the entire contracts of 90%, we need to, of course, deduct the money that we already received, right?
Deduct the money that we already received. So we received 20%.
Correct. So what do I put in here?
I would do 20% of the 1.3 basic of the down payment. Okay.
You're basically just putting in the down payment because that's all you got.
Gotcha. The 1.
These contracts, all you received was the distributor giving you $1.5 million. That's all they gave you from these contracts when they signed the deal with you, right? So in this moment, I'm deducting it here because this is all my contracts. 6.7550 is all my contracts. I already received $1.5 million of these pre-sale contracts. So now I'm going to get down here in establishing my gross pre-sale loan. And the way I do it, huh?
How is that different than the net down payment available at closing? The down payment, 20% of pre-sales versus the net down payment.
I tell you, you have to pay your sales agent here.
Mm-hmm.
The sales agent has no relationship with the bank. You have the relationship with the bank, and the sales agent doesn't care if you, you know, how much money you actually received, because for him, he just wants to get paid. For you, it's important that you tell the bank how much of these contracts have you already received. And the bank will look at the contract and notice the down payment of $1.5 million was made to you.
Mm-hmm.
The bank doesn't care that you have to pay your sales agent. They just care about, here are the contracts, how much of these contracts has already been paid, because what has been paid, the bank is not going to receive. They will deduct it when they give you a loan. So when they give you a loan of the entire contract value and you received money for that already, they're going to deduct that money. Does that make sense?
Yes. Okay.
Great. So now we're deducting it as the bank would. So we're taking the money that we received from this loan and we're ending up with a gross pre-sale loan of $5,250,000 because we're just deducting our down payment. And then what we're going to do is we have to pay an interest. So we have to pay an interest of, hold on a second. Oh, that is echt ein Scheiß hier, warte. I hate doing this with one screen. It's so annoying. Hold on. Is this the right one? This is the right one. Yeah, I'm not touching anything anymore. I'm just going to use I'm going to do it with my hand. So let's figure out the interest rate. So the interest rate that we're paying per the assumption is 8%. And it's 8% of the loan that we're actually getting. And what we're actually getting, I'm going to zero all this out because I don't want you to look ahead. Zero. I'm going to zero all this out. Hold on, let me zero this out. Zero. I want everything to be zero. Zero, 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 zero.
In fact, I'm going to start populating my Excel over here, so feel free to do
right.
that.
So what I'm doing now is I'm going to try to figure out what interest I have to pay for this gross pre-sale loan. And per the assumptions, I have to pay 8%. So how much is 8% of my gross pre-sale loan? Can you give me that number?
8% of the gross pre-sale loan of 420,000.
Let me check. You're faster than me. That is correct. Right. So now I have to figure out how much money am I actually getting from the bank. And the way I figure this out is I deduct this interest from my gross pre-sale loan. So I basically deduct 5,250,000 minus the 420. So how much is that? What is my net cash flow loan for these pre-sales?
Okay. $404,830,000. No.
No, you were right and I was wrong. My formula didn't connect. Hold on, let me just try this. Yeah, you were right. 4,830,000. Perfect. So now we have the pre-sale loan that the bank will give us against all our contracts that we have actually signed. So these are actual contracts that we have in our hand, actual distribution contracts, and the bank says, I'm going to pay 90% of these actual distribution contracts. I'm going to charge you an interest, and here's what you're going to get. And the money that you already received, which is your $1.5 million down payment, I'm going to deduct simply because you already received it. This is all we did so far, right? Now we're figuring out how much gap loan are we getting. And you remember that the gap loan is driven by the rights you have not yet sold.
Okay.
The first part of your loan.
I need to try to get my dogs to stop talking to me. I'm going to give them a treat and try to put them in another room.
That's okay.
Okay, sorry about that. Whenever I'm on a Zoom, they think I'm talking to them. It's crazy.
Of course,
I'm back.
Hey, they want attention. Who can blame them? You know, I mean, at home when I have my daughter has a dog that's about this big, or this big, like a small one, and then we have a dog. My husband and I, it's like a pit bull German Shepherd mix. And they both look the same, they're just different in size. So when he visits, it's all like, yeah, we'll have party time. So I'm in my office trying to do a Zoom call, and they're going and throwing toys and going all insane. And I was like, I can't focus like this. So then I called him, get the dogs out. So I know exactly what you're talking about. Anyway.
When I'm just listening, it's fine. But when I talk, they're like, oh my God. And I'm like, oh my goodness. Okay.
No, but I want you to, if it's okay with you, I want you to get to some of these numbers yourself, because if I just walk you through it, you know, I will send you this recording, but if I just walk you through it, you retain it better if you actually have to do the work. That's all I'm saying. So if it's okay,
yeah,
we take all the time we need until you understand this with your eyes closed. This is what we're doing today. So far we're good. We got the pre-sale loan down. Now in order to figure out our gap loan, first we have to figure out, we have our sales estimates and we have the rights that we have sold. We have to figure out what we have left to sell. How do we figure out what we have left to sell, Jessica? How do I get to that number?
How do we figure out what we have left to sell?
Remember, we started with our sales estimates that were 70% of the budget, and they are here. So sales estimates, 17,500,000. I need more coffee this morning. So we know that's our sales estimates, and of 17 7,500,000. We now made pre-sales of 7,500,000. So those sales are gone. We don't have them anymore. So we now have to figure out from a bucket of sales, which is our international sales estimates, where we took away 30%, $7.5 million, how much are we left with to sell? That's what we're figuring out right now. So what would that be? What's that number?
So we take the pre-sales out of, we remove them from the, I want to say is that from the take number or
from the estimates? Correct. You're right. So how much is that?
I think what I'm on is that I don't know the U.S. number. So we
don't worry about the U.S. right now, because we're not dealing with the U.S. right now. We're only dealing with our international rights bucket.
Okay.
Our international rights bucket for international only was 70% of the budget. We're not dealing with the U.S. And of that international bucket, we sold $7.5 million worth of rights. So of the international bucket, how much do we have left in our international rights bucket right now?
I'm like pretending to scroll on your screen. So we took pre-sale cash. So it looks like we did we sell pre-sale cash flow? Did we sell 6.7 million?
No, you're actually selling 7.5 million.
7.5 million?
Because what you do with the bank has nothing to do with anything. That's just for you to make money off what you're selling, right? What you're looking at is, I have a bucket full of stuff, and I'm reducing that bucket full of stuff by a certain number. That's all we're doing. We're basically thinking straightforward. I have 55 different territories I can sell in my bucket when I start. And of those 55 different territories for international, I'm now taking out about 5. So I have 50 left. What is the value of the 50 rights that I still have left? That's basically what we're thinking about right now. So if you would look at your sales estimate sheet, you see all the various territories listed: Germany, England, Spain. All the territories are listed, and they all have a number next to them, which is the price number for the license fee, right? That's how you know how much your movie is worth. And when you start selling, you're taking out that territory and you put a 0 next to it because you sold it. And then you put another column where you say, okay, how much did I sell it for? And you figure out how much that is, and that's your pre-sales. So, but when you sell it, it actually is no longer available for you to sell. No matter for how much, it's just not available for you to sell. So if we go by the number that is given to us, because we only know our value is 17,500,000, that's what we are told. And we are told we're selling 30%, which is 7.5 million. So if I take the 7.5 million from my 17,500,000 bucket, I'm left with 10 million bucks in rights, correct? That's all we're doing right now. So let's put that in. We're going to put that in here on the unsold rights. You see the unsold right column here?
Yes.
So all I do is, I'm going to do the formula here. I'm going to take this, I'm going to deduct it with that, and that's all I'm doing. So now, as you have learned, the bank will not give you a loan for the entire $10 million. They will give you a loan for half that value. That's why the collateral is only $5 million. Does that make sense? But we're also going to do another check to make sure that the collateral value is not more than 20% of the budget. So I'm checking right now what is actually 20% of the budget look like. So I'm going to go 20%
of 25
my budget, correct? And let's see what that looks like. That's the same amount, so I'm okay, right? So now I know I can get this $5 million loan because it actually matches my budget number. Now I have to figure out, I'm going to zero this out here. Now I have to figure out what is my interest, what am I paying here in interest? So it's 8% of my $5 million amount. So what's the bank charging me for this loan? Can you tell me how much that is?
8% of $5 million?
Yeah. How much is that? What's my interest rate here?
400,000?
You are correct. And in the case study, we're told that the bank will charge us a loan fee of $50,000. So how, I'm going to zero this out. How am I getting to my net bank loan now? Oh.
How are you getting to your next bank loan?
My net gap loan. How am I getting there? How do I know how much I have available for my net gap loan? When I take my $5 million gap loan and I'm deducting my interest and my loan fee, what am I left with? Can you give me that number?
You're deducting the interest and the loan fee?
Yeah, correct. Because those are my costs. These are the costs that I have to deal with on this loan. Because the bank is charging me this and I'm not going to get the entire loan. So I'm just deducting the interest and the loan fee to figure out what I'm left with in the end.
The loan fee is 8%. So the loan fee is 8% of 450,000?
No, the loan fee is 50,000 because it's just given to you in the assumption as a loan.
It's just a flat fee of 50,000.
Yeah, that's what it says.
It's 8% of 400,000.
No, the 400,000 is your 8%.
Is the loan fee? So the net gap loan is 5 million plus 450,000, right?
The net gap loan would be 5 million minus your cost. Minus the interest and your loan fee. So you would have to take your 5 million gross loan amount, and you would say, I have to pay the bank their interest, which is 400.
I see.
Right. So the net loan would be how much after I deduct those costs?
4,550,000.
You are 4,500,000. You're correct. So in order for me to figure out what I have available to my budget, I'm simply going to add those two net numbers because that's all I have. I have this number. I'm going to make it green for you. And I have this number. That's what I'm getting in order to finance my budget. Mm-hmm. That is the number that this is because I'm basically just adding my net gap loan plus my net pre-sale loan. I'm just adding those two numbers. That's all I do, right? Mm-hmm. This is how I get to the 9,380,000. But I have to also figure out what do I have to pay back later. And how I get to this number is adding the gross amounts because they include the fees that I still have to pay. Because remember, you haven't paid them, you haven't actually paid them, you just deducted them, but the bank hasn't seen a dime. So when you recoup is when you pay them. So for your recoupment, we want to establish how much you actually have to pay back. And it's basically the $5 million of the gross gap loan and the $5 million of the gross pre-sale loan. That's how I get to this number. So now I know 9,380,000 is available to me for my budget, and 10,250,000 I'm going to have to pay back later. This is all we do for the bank loan. Okay.
So you're paying back more. So you have to pay back more than you're actually getting in the loan.
Correct. As it is always, because when you buy a house, you're paying more because you're also paying interest. You're not just paying the money they lend you. The interest is added on in that case. In our case, the interest is deducted because we're getting the money up front to get our movie done. So they say, okay, when you start paying back, that's when we're going to charge you the interest.
Okay.
It's kind of like a mortgage loan actually, because that's when you pay the interest too. So now let's go to our next situation here. We're going to start with figuring out our finance sources. So we have the first finance source is the loan. We have the down payment. Those two we already talked about. So now let's talk about the incentives. I'm going to zero this out. We're going to do the incentives on the side here. You see the incentive little column here, yeah?
Yeah, that is also where I got a little confused. I thought.
Yeah. We'll do it together. We'll do it together. No worries. I'm just going to zero this out. So in the assumption, it says you're going to shoot the show in 2 countries. You're going to shoot it in Germany and you're going to shoot it in Belgium. And like it is normal in those countries, it will not allow you to take the entire budget and assume all this cost in the budget is eligible for a reduction in those countries. Because in reality, and you're going to find that in the US, as well as wherever you shoot, only a portion of your budget is actually eligible getting a rebate or to getting a deduction or to getting a credit. It's never the entire budget. So in our situation, we're figuring out A, how much are we spending in the region, and B, what is actually eligible. This is a real thing. So that is what you would do when you go to shoot the series in 2 countries. You're figuring out, okay, how much am I shooting in Germany and what's that going to cost? How much am I shooting in Belgium? And what's that going to cost? And what of those costs is actually eligible? So in the case study, it says you're shooting $9 million worth of your budget in Germany, and you're shooting $10 million worth of your budget in Belgium. That's, you know, so basically it tells us we allocated the scenes for both territories, and we're figuring out this is how much we're going to have to spend in each of these countries. Now, the countries themselves have a rule as to how much money they give you based on what you're spending there. And in Germany, you're getting 35% of what you're spending there. And in Belgium, you're getting 45% of what you're spending there. Okay, so let's figure out what we're getting in Germany. So how much are we getting from the German government if we're spending $9 million and they give us 35%? How much is that?
Magic. I don't know how to do this.
You know how to do 9 million times 35%.
Oh, so that's all we had to do, is just times 9 million times 30.
Because I just said we're spending 9 million in Germany, and Germany gives us 35% of what we're spending there.
So that was of 3,150,000.
All right, let me check that. You're too fast for me. Hold on.
I'm on it.
You're so fast, damn it. All right, here we go. Let's see how much we're getting from Germany. You're right. So how much am I getting out of Belgium then?
Okay, so that was 45%. Times 10 million. That was 4.5 million. 4,000,000.
Perfect. As I'm putting these two together, now I'm counting them together. I'm figuring out, okay, I'm getting 3,150,000 from Germany. I'm getting 4,050,000 from Belgium. So my entire incentive is 7,650,000. I just added them up. So I go back in here and I put that in there. I can either write it in there or put it in there. It doesn't really matter. So I'm just writing it in there. There is no fee mentioned in any of the studies, and that's because you're not going to have a fee. You don't need to cash flow your tax credit in these European countries, by the way. They will pay them to you as you go through production. So you're not going to need a lender, which is why you're not going to need a fee associated. So you get the full credit. You get the full 7 million.
How did we know that there was no fee? How did we know that there was no fee? Is that just an assumption?
Yeah, it is an assumption. It says no fees applicable.
Okay.
Otherwise, I would have told you there is a fee and I would have told you how much it is, right? It says no fee. And I'm just giving you the reason why there actually is no fee in reality, because these countries pay as you go through production. So if you ever shoot something in Belgium or Germany, you're going to find that you're not going to have to pay a cash flower or to get a loan for this, because you're not going to need to. Okay. So now I'm going to zero this out. I'm going to zero all this out so we can go into our steps here. I'm going to say 0, 0, 0, 0, 0, 0, 0. I'm going to zero this out. So now let's go to crowdfunding. Can you tell me how much crowdfunding the assumptions are telling you we're getting?
You know, I sure can. So crowdfunding is provided for at $750,000.
Okay, so I'm just going to put that in here. All right. And then I think we have to pay 15%, right?
15% commission to be deducted, 3% back end requested.
Yeah, back end we deal with in the recoupment, but we're deducting the commission here, and that's how we get to the 637,500. Is that clear to you, what I just did?
I'm sorry, I was looking, I have my other computer's laptop open so I can be
no
same
worries.
time with
I'll walk you through it again. I'll walk you through it again. You gave me the number of $750,000 for the crowdfunding, which is this number. You gave me that number. And then you told me 15% have to be paid in fees, which is this number. And then I just deducted this, and that's how we get to this number. We've done this 50 times in other case studies, so this should be something you remember.
Yes.
Want to tell me how much the brand integration amount was that we were getting?
Brand integration is 500,000.
Okay, so I'm going to put that in here. So they're charging us a 25% fee. So we're ending up at 375, which is this number. But because we only get 50% on closing, I can only put 187,500 into my finance plan right now. Okay. Makes sense?
Yes, I think that was the only thing I got before your help.
Hallelujah.
Got one thing. That in the budget.
You're doing good so far. You're doing good so far. So tell
the budget in this area.
You're doing good. So tell me what my mezzanine loan is. I think it's 10% of the budget. So how much would that be?
10% of the budget?
Yeah.
Oh God, 10% of 25 million?
Yeah.
Is 2.5 million.
Okay, so let me put that in here.
I still need to check my numbers on that.
That's okay. I have to, if I don't do it like this, trust me, I cannot do it. Are we paying any interest with
Yeah, we have a mezzanine lender providing 10% of the production cost, and then 50% EP fee payable upfront is what you put in the case study.
50,000. Is that interest?
50,000 EP fee payable upfront, and then yes. No, I'm sorry. What'd you say?
Is there an interest mentioned? I don't remember.
Yeah, it says 15% premium is charged on the investment. No interest is charged. No back end is charged.
Okay, so we're not having
15% premium. No interest.
That's 50. The premium comes when we do recoupment. The only thing you're ever deducting in your finance plan is interest, premium, bonuses, back end participation. All that stuff you deal with in the recoupment. So we're not dealing with that right now. I'm going to ask you about that later when we go to the recoupment schedule.
Okay.
So we are here and we're doing our interest is 0. So when we have $2.5 million from a mezzanine lender and we're deducting $50,000 in fees, we end up with $2,450,000. We're clear so far, yes?
Mm-hmm. Mm-hmm.
So we should have gotten, if I take all these different finance sources together here, I'm getting to a subtotal because I'm just adding up all we got to. We got the pre-sales, we got the down payment, we got the incentive, we got our crowdfunding, we got our brand integration, half of it, we got our mezzanine. That's all I'm doing. I'm adding it up and I'm getting 21,617,500. So I'm just adding up what we got. In order for me to figure out how much equity I need, how do I get to that number? How do I know how much equity I need?
You would compare that to the loan and, hold on, I have to go back to, I'm sorry, I had to let my dogs out, they were scratching.
Yeah, no worries.
You would compare that to the amount needed. Sorry, I had to open up mine. To cover all of the budget, right?
Yes, simply. You got 21 million, you need 25 million. So how much equity do I need?
Roughly like a little bit of under 4 million.
Exactly. This is the equity we have. And it's basically just the budget, 25 million minus 21. That's all it is. I'm going to walk you through this again so we have it. I'm going to start from the beginning, okay? So here's how we started. We had 70% of our budget as estimated distribution revenues for us to be received. That 70% is calculated by taking 70% of the budget. And it's right here. I made a little note here. I'm going to send this to you. I'm going to actually make this red. That's how you calculate this. So this is where we are right now. We're just figuring out how much is the value of a project. Hallelujah, it's 70% of the budget out of international. We're not dealing with the US right now. We're getting to the US in a minute. Okay. And then we're figuring out what is our pre-sale. So the sales agent then goes out and does actual distribution agreements. And again, the only reason why they're called pre-sales instead of sales is because they're done before we have actually our movie finished. Here's how we get there. We're taking the pre-sales by figuring out how much are we pre-selling, and we're pre-selling 30% of the budget. This is how we got to this number. Now, when these pre-sales are made, we're getting something paid up front from the distributors. Distributors are paying us on these pre-sales 20% of whatever we have sold. Since we sold $7.5 million, we get receiving $1.5 million in upfront payment, like a down payment from the distributors. Sales agent doesn't do the work for free, and he's going to charge us a sales fee. And that sales fee can only be charged on what we've actually received. And because we only received $1.5 million so far, the sales fee is only 12.5% of the $1.5 million, which is 187,500. In order to figure out what we have available right now as a first funding element for our production, to cover our production costs, we're basically just deducting the down payment. We're deducting the sales fee from the down payment, and that's how we get to the 1,312,500. It's the first money we're getting. So in the next line, we're sitting on all these distribution agreements, but they're just pieces of paper. They have zero value to us unless we can take them to a bank that gives us money for it. So we're taking it to the bank, and the bank says, thank you for all these beautiful agreements, but I'm going to apply a discount because who knows if they're all paid. So they're applying a discount and giving us 90% of our sales agreements, and our sales agreements were $7.5 million. That's the value that we have entered into. So if I look at 90% of $7.5 million, the bank is going to look at $6,750,000 as a value that they are establishing, giving you.
Okay.
Of course, know that you already got some money from the distributors. So they say to you, you got $1.5 million already, darling. We're going to deduct this right here. So they're deducting it, and what you're left with is $5,250,000. I'm going to make a note here actually, and I'm going to say pre-sales. I'm going to say discounted. Would be great if I could spell. Discounted pre-sales minus what did I just say? Down payment. And I'm going to email this to you so you have all the steps later. So because this is applying for everything you do in all your life of film finance. So you always have this. So this is how you get to this amount. You take the discounted pre-sales, you deduct your down payment, and this is what you actually get. And then the bank is going to charge you an interest that you're charging on your gross loan amount, because that's what the bank is giving you. They're giving you $5,250,000, and you're going to get an interest charged on that, which is 8% in our case, and that's $420,000. So we have to deduct this interest from our gross bank loan. So what I'm going to do is I'm going to say this is gross loan minus interest. So you remember how you got there, yes?
Yes.
Make these steps in red so we get there. So there we go. So this is how you got to this number. Now we're figuring out what is left. How do we know what's left to sell? Because we're talking about unsold rights. Unsold rights are simply that, it's rights that we haven't sold yet. And that you get to by taking all your international estimates and deducting your pre-sales. That's how we get to the 10 million. Now, in our world of what is it worth to the bank, we know the bank is only going to give us 50% of that. So how do we get to that? We're taking 50% of the unsold rights and just putting that number in there. And the only check we're making in order to see if we actually get this number is we're figuring out, is this going to be as much or less than 20% of the budget? Because the bank will never give us more than 20% of the budget. So we're running a little test here just for our good senses. And we're going to say, let's check this out. And guess what? It's the same amount. So this is our gross bank loan. This is fine. We love this. This is fantastic. So the interest is being deducted of 8%. The loan fee is being deducted. And the net gap loan is basically, I'm going to write this down too, our gross loan minus interest and loan fee. This is how we got there.
Okay.
Fairly much on loan fee. So this is how we got there. It's going to mark this red too. So that's that. You now remember how you got there.
Okay.
So enter would help. This is why we got to the 4,050,000 from the gross. Now how we're doing this is we're adding the net loans available at closing. So we're basically just adding our net loan amounts and figuring out what do we actually have at the closing, when at the time of putting all the finance elements together, what's that amount? And we're just adding those two net loans. And this one is what we need to recoup. It's going to be the gross loan, because the gross loan includes all our fees. I'm going to write gross loans to be recouped. And you know what that is and why that is. It includes all fees that you have to pay to the bank. This is all we did on the bank loan. So then we went and figured out our other finance sources. So here we have already talked about the bank loan, we have talked about our down payment. Now we have to figure out what on earth is going on with our incentives. So we went to Germany and we said $9 million is paid. That's our portion of what we're spending in Germany. And what we're spending in Germany is what we get 35% of. That's how we got to the 3,150,000. Then we went to Belgium and trying to figure out how much are we spending in Belgium. And we figured out we're spending $10 million in Belgium. And Belgium says, that's wonderful. I'm going to give you 45% of what you're spending in my country. It's 4,500,000. And we're adding those two together. And that's how we got to the 7,650,000. We're not paying any fees because Belgium and Germany will release the funds to us without us having to get a loan for them. That's why nothing is deducted. Crowdfunding, we know it's told we're getting 750. We have to pay the fee, of course, and we're deducting the fee. Brand integration, same thing. We're told we're getting 500,000. We're deducting the fee, and we're getting 375,000. But the brand integration person say, I'm not giving you 100% upfront. I'm only giving you 50%. So that's why we have 187,500. We figured out our mezzanine lender wants to give us 10% of the budget. 10% of 25 million is 2,500,000. Did not charge us any interest, but they did charge us an executive producer fee, which we need to deduct. That's how we got to the 2,450,000. We're adding all this up to try to figure out how much money do we actually still need, because the equity investor is going to give us the balance. In order to figure out the balance, we take a $25 million budget, we're deducting what we got, and that's how we get our equity. Clear so far?
Yes.
Perfect.
For the most part.
Let's go to domestic. We're doing a nice little domestic chart here. So now, in our case study, there is a box office number. How much box office are we getting?
Okay, it says the film makes 70 million in the US box office.
All right, so let's put that in here, $70 million. 1, 2, 3, 4, 6. I'm gonna zero this stuff out. Hold on, 0. So I don't want you to look at this right now. So we're getting $70 million in the box office, great. How much of that is going to go to the studio? It will tell you how much the studio will actually receive from that box office, because we have to pay the exhibitors, the theater owners, some money from the box office. In every film that is released in any theater, the box office is going to be shared between the exhibitor and the studio. It's always the same. It just depends on what deal the studio has with the exhibitor to figure out how much that is. In our case, how much is the studio left with? What does it say there?
Okay. It says the US box office revenues are received under the industry standard split of 35/65, with 65% goes to the US studio.
Great.
Which is this film.
How much is that? How much is 65% of the box office? Give me that number.
65% of 70 million. That'd be 45,500,000.
You are correct.
Bella.
Perfect. You are correct. Now the studio. Oh, hold on a second. The studio says, I want to get a distribution fee of 25%, and the 25% obviously is charged on what the studio gets. So what is 25% of that studio share? What is the distribution fee?
I'll tell you in just a second. To give my dog a treat. 25% of 75 million?
No, you're charging 25%. No, not 75. What was the studio share?
70 million.
What was the studio share?
The studio share was 35 actually, right?
What is, no, the studio share was 65. You just told me that the studio gets 45,500,000. So if the studio gets 45,500,000, it's gonna charge a distribution fee of what it gets. What is that distribution fee? 25% of what it gets is how much?
Yes, you're right. The studio charges a reduced distribution fee of 25%.
Of what it gets, what it has. It can only charge on what it actually received. And what it actually received, you just told me. You told me it receives $45 million. So how much would that be?
So 25% of 45,500,000.
Correct.
Is 11,375,000.
Perfect. There we are. So now, in order for us to figure out what the adjusted gross is, I'm basically just taking the 11 million and deducting it from what the studio has. So this is how I know how much money I'm left with. 35 million bucks. I'm just deducting it. I'm basically taking 45,500,000 minus the distribution fee. I'm left with 34,000. That's 34,125,000. That's what I have so far. So now in the assumption, this says is the producer gets a rev share of that of 35%. So what is that rev share number?
Producer's revenue share is 35% of the box office revenues after distribution fees.
Which is this one. Because
Okay, so
here's the distribution fees, we deducted them. We had 45,500,000 that goes to the studio. Our distribution fees we figured out is 11,375,000. That leaves us with 34,125,000. That's what we are looking at right now that we're left with. Of that, our producer gets 35%. So how much would that be?
Okay, so that's 34% of 11,375,000.
Hold on, why 11,375,000?
Hold on. So they get 35% of the box office revenues after distribution fees. So if the distribution fee was the 11,375,000, what isn't the adjusted gross after that 34,125,000?
Correct. Exactly.
So it's 35% of the 34,125 number, right?
Correct. Exactly.
Let me do the math on that. I can tell you're already there, but let me see. 11,943,750.
Perfect. You're good. So that's now we know this is what the producer is getting. Now the producer had a P&A investor give him money to do the P&A campaign. P&A campaign is basically what the studio would do when they release a movie. They make posters and trailers and they do all the advertising. In our situation, we have an investor giving us the money to pay for that. The studio still does the work, but the investor is going to give us money, the P&A investor. So the P&A investor says, how many screens are we going out to? Okay, we're going to 3,500 screens in the theaters. Per screen, they think they're going to spend $1,500. That's kind of what the assumption is, right? So if I have to pay $1,500 per screen and I have 3,500 screens, how much P&A would that be?
Okay. So would we do 1,500 times 3,500?
Correct.
Basically?
Because that's what we're spending. Absolutely.
And that would equal 5,250,000.
Correct. Now the P&A lender, the P&A lender says we want to make money, of course. So they're charging us a 25% fee on their money. So given that they paid us 5,250,000, what's the fee going to be on that?
They want to make 25% of that?
Yeah.
Okay.
They want to make 25% on their money. So they're going to charge us 25% of the money they're giving us, which is the 5,250,000. So how much fees are we paying to them now?
I think that's a fee of 1,312,500.
That's correct. So in order for me to figure out how much I owe to the P&A lender, I'm going to zero this out here. I basically take the fee that I have to pay to them for giving me the money and the money that they're actually giving them, and I add that together, and that's how I know I owe to the P&A lender $6,562,500. That's what I owe to them.
Okay.
In order to figure out what I'm left with, is I'm going to take my revenue share as the producer. I'm going to deduct what I have to pay to the P&A lender, and I now know what I'm left with, right? So in order to figure out what my share is, I'm going to take my share, the producer share. I'm going to deduct what I need to pay to the P&A investor, and I know what I'm now making in the international, right? So what I'm making is this. This is my US revenue. I'm going to mark this, hold on. I'm going to mark the US like orange. So in order for me to figure out what my entire worldwide revenue is, I basically take my US revenue, which we just calculated, and I add my original international revenue, which is here. We know what that was. And I add those two together, and then I figure out what I'm making in the world. So I'm making in the world 17,500,000 from international, plus I'm making 5,381,000 from the US. So my worldwide revenue that I can play with later in recoupment is 22 million. I'm going to make that green because this is, oh no, that's not that one. Hold on. I'm going to make that green like money. This is how much money we're getting from the world.
Okay.
Okay, and we're going to figure this out on the side range here because we're going to need to work with all these numbers in our recoupment schedule. So far so good. Now we're going to recoupment. So this is the second sheet. We're clicking on recoupment.
Okay.
Click. So here you see our 17 million. Actually going to zero all of this out because I want to start from scratch. So scratch. I'm gonna zero everything out. Now we're going to start from scratch. Tell me how much money was estimated to get for us to receive out of international.
That was I believe that was 17.5 million.
Correct. I'm going to go back to my sheet here and I'm going to click on this. What populates on this end? How much down payment did I get?
1.5 million.
Correct. So I'm going to click on here and it's going to populate over there. How much was my revenue that I got from the US? I'm going to go to this because I don't know if you have that. So I'm just going to take the 5,381,000 because you know what that is. We just did it. So I'm just going to click on this number. That's my US revenue. I'm going to take it over here.
Okay.
So now I am here, right? But when we go further down, remember the brand. Oh, remember the brand integration that we're still getting? We're still getting the other half of the brand integration, right? So I'm going to add that to my revenues here. Correct?
Yeah.
That's how I got to this number. This is my revenues. I'm taking my worldwide revenues, I'm adding my brand integration, and I get to 21,568,750 of my worldwide revenues. I'm going to run a waterfall here on the side so that we always know where we are. So right now in our bucket, in our revenue bucket, we have 21,567,750. So our collection agent says, I'm being paid 1% of that. So how much is due to our collection agent?
1% of the 21 million? Okay.
Yes, 1% of whatever got into the bucket.
215,687.50.
Correct. Exactly. So now I go to my waterfall and say, okay, of this bucket of money that I have, I had to pay 215,687.50, and I'm now arriving at 21,353,62. That's what I have right now. This is what my waterfall shows me. This is how much money I have right now. My next person that I need to pay is the sales agent. I'm going to zero this out. Hold on a second. I just want to make sure that it's the right. This is so annoying. Sorry about this. Again, I usually do this on 2 screens. So we're gonna do the sales agency fee now. So the sales agency fee was 12.5%, and the sales agent is charging us. Oh, you need to go somewhere?
Oh no, it's fine. I'm back.
All right, no worries. So the sales agent is charging us 12.5% of our international, which is this, because we already paid him the money for the 1.5 million. So he's only getting 12.5% of what's left, which is 12.5% of 16 million, right? So the sales agent is getting 12.5% of 16 million is $2 million. Now, in our assumptions, we do not have a distribution expense percentage. we have a distribution expense amount, and that amount was $150,000. It's just capped at that amount. So I have to add that because I have to pay my sales agent the distribution amount. So that's why we're paying our sales agent $2,150,000, right?
Mm-hmm.
So that reduces us basically right now we're looking at $19,203,62 that we have available in our waterfall. The next one we pay is the bank. We're paying the gross bank loan, and that's $10,250,000, and we can look here what the gross bank loan is. And there you go, it's $10,250,000. That's where that number comes from. So I'm just basically taking that number of the gross bank loan and I'm putting it here. That's all I'm doing. Now the SAG Guild people told us they want to be paid $150,000. So we're paying them $150,000 in a waterfall. So basically just plugging that number in. So that's where the SAG is. So now next thing we go to the junior loan. I'm going to actually zero this out so you can do a little on yourself. Zero this out. So tell me again what the mezzanine loan amount was. When we go back to funding our mezzanine loan, let me just look up here what it was. Mezzanine loan was, where is it? Here. This is the number. The mezzanine loan was 10% of our budget, right?
2.5 million. 2,500,000.
2,500,000. So I'm going to go and just put that number in there. That's all I'm clicking. That's the loan amount. Okay, fine. Now the guy had 15% in premium that he wanted, so I'm adding that here. So that's why we're paying $2,875,000 because I'm adding 15% of 2.5 million here, right? Yep. So now we're down to 5,928,062 right now in our waterfall. So now we have to pay our equity back, and I'm going to go back to our sheet and just looking at our equity. The equity is down here. See, I'm just clicking on this amount. We're moving the equity over.
I'm back, sorry.
Yeah, so we're moving the equity over, and it says in our case study that we have to pay the equity investor 20% premium. So I'm just adding the premium here to the equity. You've done this before, so you know. So now we know we're paying the equity $4,059,000. That's what we have to pay. So now down to $1,869,062. That's where we are right now in our recoupment waterfall. And there's no deferments. So all our expenses together, if I calculate all these expenses and sum them up, I have expenses totaling $19,699,687.50. And when I take all my revenues of $21,567,750 and I deduct all my expenses, I should be arriving at the same number than what I have left in my waterfall, obviously. And if these numbers are not the same, there's a mistake. So all you do to get to this number is you take all your revenues, which are here, $21,568,750, and you're deducting all your expenses, which we summed up here all together are 19 million. And we're going to click enter, and it's the same number. So now we know we did it right, because here we just deducted them step by step, and now we know it's correct. In order to figure out our profit participations, we need to look at what we have left here, because this number is our net revenue number, and that's all we have available to share with people right now. So who are we sharing with? We're sharing with the equity investor, who gets half of the percentage that he invested with us. Remember here, he invested 13.53% of the budget for us. We're taking half of that in order to figure out his back end, which is basically 50% of his profit participation is this. So the mezzanine lender didn't get anything, I don't think. There were no deferment. Hold on, did the mezzanine have a profit participation? No, I don't think so. Does it say? I think it just had an interest, right? Didn't have profit, no?
No, no back end is charged, no interest is charged.
Perfect. So it's zero. Now each of the talent has 10%, so altogether they have 30%. So they're getting 30% of the net revenues, which is this. The crowdfunder, I believe, was having 3%, so I'm putting that in here, which is 3% of the net revenues. So we got that far. So we're now,
yeah. Would you consider a profitable film?
I'm sorry, say it again.
Oh, would you consider this a profitable film?
Yeah, it's a profitable film. Yeah.
Okay.
Anytime you have profits, you have profits, because you are making $1,125,000. In my book, that's profits. Because
Okay.
that's what you're making. If
Yeah.
you pay all these people and you get to pay $743,232 to everyone in your profit participation bucket,
Uh-huh.
you end up with $1,125,000, because all you're doing is you take your revenues of $1,869,062 and you're deducting all the profits that you have, which is this, and that's what you're left with.
Okay.
That is it. So I'm going to save this for you.
Okay.
And I'm going to email this to you.
Mm-hmm.
And then I'm going to call this Jessica. So I know what I did with you, Jessica. So I'm going to send this to you now.
Thank you so much for your time.
Of course.
I apologize if you're on vacation. I
Don't
really
worry about it.
taking the time. Is it your goal that we kind of do this together? I'm not together. I really appreciate you taking an hour, but I'm assuming you don't want us to collaborate with students. Is it your goal?
Of course, you should collaborate with students.
Oh, we should? Okay.
Why not?
Okay.
Jessica, if you are in a live class, and that's what we're pretending here, because we're going online. I mean, no, okay, this class is set up as an online class, but if you're pretending you would be doing this live with me, of course you'd be talking with each other. We would be doing this right now in a classroom where I would put groups together and say, you guys figure this out. That's how it would usually work. Remember the one time when we did a breakout session? I don't know if you were in that class when we did the breakout session. I basically gave everyone about half hour to figure out a case study, and they all worked together.
Oh yes, I was in that class. I think.
Remember? Yeah.
I think there was a lot of silence, but yeah, I wasn't sure. I wasn't sure if you want us working together on the quizzes.
Absolutely, work together. Because
okay with that. That's cool.
Please work together. You know, because when you work with me, like you're doing this, sometimes it's like you have fog in front of your eyes because you're dealing with me, and I know everything because I'm God, right? But you have fog in front of your eyes. So when you work with a student, right, you get to hear what they have to say about why they get to the number they get to. So it's actually more inspiring than me doing this with you. It's more inspiring to work with your student colleagues or your course participant followers, if you want to call it, and talk to them about it and say, why did you get to that number? I don't get it. And they say, well, I'm thinking it's because of this. So now you have a conversation that is much more interesting than what we're doing right now. And I'm happy to take an hour because I enjoy what I'm doing. But please feel free, do whatever you work on with whoever is in the class that you want to work with.
Okay, good. So I'm going to meet with another student tomorrow to try to go through it again. I still will turn in my work, so don't worry. But
you don't need to turn in the work because I already basically did it with you. So I'm just going to give you the grade. You don't need to do anything right now. But I want you to have this, Jessica, so that you can go back to it anytime you need to look it up. That's the only reason why I'm marking this up for you and sending it back to you.
Okay, no, I appreciate that. Thank you very much. And now that I know your stance on collaboration, that makes me feel more comfortable.
Of course, everyone should collaborate with everyone. I don't care. You can collaborate with me, you can collaborate with each other, you can collaborate with your beautiful little doggy, whatever makes it work, whatever works, you do.
They can help me with this. They can just bark and demand treats, which was annoying.
Yes, they want to be taken care of and play with mommy. There's nothing wrong with that.
All right. Well, thank you so much.
Of course, and I'll send this to you so you have it. And then, yeah, feel free to share with everyone.
Okay. Thank you so much. I appreciate
your time. Have a great day.
Your day. Bye.
Bye.